Welcome everyone to another Maine SBDC webinar. My name is Kelsey Reardon and I am with the state office hosted by USM. And today we are joined by Maine SBDC at CEI Business Advisor Anne McAlhany, as well as the Carver Memorial Library in Searsport. So we are doing another lunch and learn session with them about financial literacy and business basics. And so today we're going to be going over understanding cash flow projections, which is sometimes as hard to understand as it is to say. So if you are feeling overwhelmed at the prospects of what's going to go into this, hopefully Anne will ease some of your concerns today, present all of this in an easy, accessible way so you know what the next steps are. I will be sending out a follow-up email that will include the presentation as well as another tool that she's going to show later on and a link to the recording. So if you feel like we're going too fast or there's something you miss, you can always rewind that, and all of that will come out a little bit later today. So if you have any questions at all, please just add them to the chat feature below. But if it comes to you later, you can always respond to one of my emails and I can connect you with Anne. Anne's contact information will also be in my follow-up email. So otherwise, I think we're all ready to get started. So I'll pass it over to Anne.
Thank you, Kelsey. Thank you for all your organizational efforts. And I'm certainly thank you to Sue at the Carver Library who spurred this whole idea of doing this series of workshops. So thank you. I'll jump in because we've said we'll keep it fairly brief. I'll present for a maximum of 30 minutes. And then we'll stay on. There'll be time for plenty of follow-up afterwards, or as Kelsey said, you'll have my contact information. You're welcome to reach out as well. So thank you for your bit of a patience getting into the meeting. We were, of course, trying to sort out some technical stuff that the last time we did it was fine. Today it wasn't, but I think we'll be fine now going forward. One of the ways the Zoom screen looks for me is unfortunately I can't see the chat. So Kelsey, so feel free to enter things into the chat. Kelsey, if you think I should be interrupted to deal with it right then, feel free to interrupt me, or we'll then circle back at the end and take care of any questions. Let me see. I can move this slide. Maybe we didn't work out all the details we thought we did. Oh, there we are. Understanding cash flow projections. So thank you for joining us. As she referred, I'm Anne McAlhany. I'm a business advisor in the Bangor office, which is hosted by CEI. Today I am actually literally in the Bangor office, but as business advisors, we are still working remote, which has had this huge advantage of we've been able to deliver these workshops statewide, and probably even people from other places drill into some of the information that we've presented. As she said, I'm hosted by one organization, but there's multiple partners that help us to be here. I'm not a federal employee, but actually an employee of a nonprofit. But there's, as I said, many partners that help us to be here and offer these services. This is my couple of housekeeping details. I think Kelsey's covered those, so we'll jump ahead. A little bit about the Maine SBDC. I am a part of this larger organization, which is business advisors throughout the state. I think there's about 16 of us full-time. This is my full-time job. It's the only thing I do working with clients, business owners or aspiring business owners about their business issues. We do cover a wide range of topics, and there's not a charge for our services, and all of my conversations with clients are confidential. Our services, as you can see, range from marketing to financial analysis to numbers things, and that's what we'll drill into today is numbers things. Who am I? It looks like right now I'm a blank slate. Actually, before this job, I did work in the for-profit world. I previously had my own business in the food world, and I've also worked a good chunk of my pre-Maine SBDC time as in the food world in various places and ways, and also some time with companies that involve more warehousing, inventory management. For better or worse, I am the longest tenured Maine SBDC business advisor at this point, but it's been a huge opportunity to work with many, many great businesses. And I learned from all of you. So thank you for your trust and your conversation. Now let's jump into who are you? Kelsey, she's the one with the magic abilities. She said she'd throw up a quick poll for us. I know we're a fairly small group today, but if you could just quickly answer, what type of business are you? That's helpful to know. So I've got some that are production or retail businesses, a couple of them, services it looks like as well. Somebody's still figuring it out, and that is absolutely fine. Thanks, Kelsey. I don't know what other people can see when I see my screen, so hopefully others can. Does the screen come up, Kelsey? Yeah, okay. We can take it down and we'll jump ahead again. We're trying to keep moving a little bit. And the reason I ask that in part is because it makes a difference. We're talking about specifically about cash flow projections, and the type of template or sheet that you use varies a little bit by the type of business that you are. And we'll jump into that as we go forward. Get my screen straight. Okay. Things I would like to accomplish in this meeting. For one, we'll talk about what is a cash flow projection. That seems like a great place to start. Then touch on at least why. Why do I have to go through this exercise? Maybe I don't even like numbers. What's the purpose of a cash flow projection? Why should I even bother or care? And then we'll spend more of our time talking about how do we even create or develop a cash flow projection. And then finally, I'll show you a couple of templates and contact information so that you can reach out later. As Kelsey said, she'll send some files to you so you can play with cash flow projections on your own after this. First, my real goal for this is to help you go from what? I find a lot of people are totally overwhelmed by cash flow projections. I personally think they're a great tool, a great instructor about our business. They teach us some things about numbers. They help us to do some homework and focus that homework, but they can often be overwhelming if you've not done them before. My goal then is to take you from what to doing a happy dance. Can you at least then have some sense at the end of this short conversation that, oh, that's not so hard as I thought it was, or have a sense of where do I even start to put together a cash flow projection for my business. A couple of reasons that we even think about cash flow projections. For one is to see how much is in our piggy bank, and particularly how much money is potentially in our piggy bank at any given time over the course of our projected period. We do project out usually at least 12 months. We'll talk about that as well. Why do I even want to bother? For one, as a startup tool, it's a great tool to help us think, if I start this business, does the business even make sense? Can it help me do what I need it to do? Will it pay me the salary that I need to have if I'm giving up my day job to start this business? Certainly many people come to us, I need a cash flow projection. Why? The banker said I had to. Well, that is a good reason, but bankers have reasons that they need cash flow projections because that's really the numbers that go with your narrative in your business plan. It can also be a tool to help us make smarter decisions in our business around pricing, hiring, purchasing equipment, helps us budget. When do I save money? When can I spend a little more money? How does it look over the course of the seasonality? As we know, we live in Maine, this great state, but summertime can often be, if we're in business, a really busy time for our business. And sometimes, March might not be as busy. So how do we understand the seasonality of our business and use that cash flow projections as a tool to deal with that? And also, if I've got a business, I probably have certain goals. Help me, and a lot of those are around numbers. How does the cash flow projection can help us understand if the business can meet our goals, or maybe it needs to be tweaked in order to do so. A couple of terms and concepts, just as we think about cash flow projections, helpful to understand. So you'll know what we're talking about and how they relate to the business. One of the terms certainly important to understand is fixed cost. Those are those costs in a business that don't change according to how much we sell. Like I mentioned, in the past, I worked in the food world. I had my own bakery. Fixed costs would be things that don't change measured to sales. For instance, many businesses, if you pay rent, the rent doesn't change each month. If I sell more product, it's really the same. Things like my phone bill, my insurance bill, in general, don't change based on how much I've sold. However, there are certain costs that do change depending on my sales. For instance, those are called variable or direct costs. They're directly associated with the sales in the business. Sometimes also, often referred to as COGS, cost of goods sold. Again, in any food business, the cost of goods sold is that those ingredients that went out, those food things, we take elements, flour, water, sugar, salt, convert them into a product and sell it. That those ingredients are my cost of goods. It's important to understand those. In some businesses, cost of goods might also include labor. I'm thinking if I was a manufacturing business and someone is always, I had an employee who was always directly involved with the production in my business, then I might attribute their wages to cost of goods sold as opposed to overhead. With any business, the assumptions that we use to come up with those numbers on this sheet we'll look at shortly are really, really important. How did I come up with those numbers? And especially if the cash flow projection template is going back to a lender, the assumptions are critical so they can read this sheet and understand where you came up with the numbers. A couple other concepts would be to understand that cash flow projections are all about timing. If the money hits your bank account, it goes into that section of the sheet called income or cash in. If the money has left my bank account, credit, debit card, write a check, however it leaves my bank account, then that's when it hits in that particular month as an expense on the sheet. We'll look at that shortly. Just to understand, there's some financial statements that we talk about in a business, one of which is a P&L or an income statement. A cash flow projection is very close to a P&L, but a little bit different. And there's two differences that in particular are to be highlighted or to be noted, and that's depreciation, which is a non-cash thing. It's more related to your taxes. And then interest expense. If you'll recall, when we make payments on something, we're paying both principal and interest. For instance, if it's $1,000 payment and $600 is $1,000 payment, if $600 is back to the principal, then $400 is interest. Obviously, for our purposes with the cash flow projection, all of that money left my bank account. But for tax purposes, only that $400 of interest expense is considered an expense. But on our cash flow projections, we'll include all of it. As I said, we'll look at two different types of sheets because a service business or production or resale business have a couple of different elements, primarily that cost of goods sold that we looked at earlier. Kelsey, I'll drop back for a second. Are there questions I need to chat about? I've kind of gone full tilt here, so.
You're doing great. The only addition was that Lisa, who's joining us, is in production, but also a service business. So that'll overlap a little bit.
Sure, okay. I've done a lot of talking about something, and now you get to look at it. This would be what we would consider a fairly basic cash flow projection template. You can do it with pencil and paper. It's an Excel file where it'll do the math. You can see where all these gray spots are that allow you to have formulas built in so you don't have to do the math yourself. But it's a tool that can work either way. As I said, this one's fairly basic. First, if you haven't seen one before, it might look overwhelming. I just suggest that you take it one little bite at a time. Remember, each month is one reason it looks busy is because it's got 12 months all on one sheet of paper. But that again helps us particularly to see the arc of a business or to see its seasonality. One thing that we start with, I find is helpful to start with this part here in the middle, the fixed expenses, the overhead expenses, because a lot of times they're pretty easy to determine. For instance, if I've got, they're fairly easy to determine because, for instance, rent. If my business pays rent, I'll know what it is, or I can get a pretty good estimate about the places I'm looking at for renting, so that I have a sense of what that number might be. And therefore I can fill in that section. Let me see if it'll let me do something here. Now, so typically I will start, when I'm working with someone on a cash flow projection, I'll typically start with those fixed expenses. We can change the descriptors over here as necessary, but if you've got rent, then it's easy enough to go into, do that again. It's easy enough to go into the boxes and start to fill out, right? If I'm starting my business, start paying rent in April, then I go to this box that's April. I'll put in $500 and then every month afterwards. Same thing with other things like telephone. It's fairly easy to determine what our telephone bill might be if we even will have a separate phone. Utilities, maybe they're included with the rent, or if they're separate, but we can get some sort of estimate because they probably don't change too much every month. Unless, of course, our utilities include heat, right? So at that point, then we'll know that what's in the middle of the cash flow projection, in the middle of the arc of the year, will probably be a different number, and we'll have higher numbers in January through March, and then again in the end of the year to cover our heating expenses. Also, if we look at the bottom of the sheet outside of this gray line, for instance, loan payments. Do we have a loan payment in our business? We know that that's a payment that's pretty much the same every month. Usually it doesn't change, or at least for a period of time, it will stay the same. So we can enter that fixed amount into that line, into that row of our cash flow projection. If we project taking some money out of the business, it's another place we can add what we project to take out of the business. And we can see how much money is left over at the end of the month, if you will, according to our projections. Because we also go to the top and look and say, what do we have? What do we project for sales? As we said earlier, certain times of the month will probably be busier than others, especially in Maine. If we're on the coast and we're seasonal, then maybe it's really June, July, and August are our peaks. And for some businesses, we'll pick up again in December, maybe late November for holiday sales. It's very easy with a sheet to say, okay, I've got some cash sales, but I heard someone, they offer some services as well as some other production type products. Very easy to set up two lines here, different types of sales. Sometimes it's helpful to categorize them so we can keep them look at them separately, and easier to project them separately when we think about different revenue streams. Just knowing what time we are, I will keep going. Let me show you. So this was what I call the basic, and it really works well for a service type business, where again, we don't have any of those cost of goods, any ingredients particularly. It's mostly we have a revenue stream, and then we have some of those fixed expenses, a lot of times just overhead related to an office, maybe some travel costs, and maybe a loan, and that's it. But it's pretty straightforward with the expenses. Then the other sheet that we use, okay, don't get too excited, but I know this seems like a lot of lines, again, partly because to make it fit all on the screen here. But again, the shape of the sheet is the same way. At the very top of the sheet, we can see that the very top, the very top of the sheet is, again, cash in, sales, revenue, however many revenue streams we would like to divide up to understand the business a little better. The addition to this sheet is this little section called COGS, cost of goods. This would be the sheet that we would use for business that made something or resold it. If I had a gift shop, I'm buying in product and then I'm reselling that. I would know that probably my standard markup is about 100%. If I sell something for $100, then my cost of that was probably $50, give or take. So in this sheet, the difference, as I said, is that we acknowledge that there's some cost of goods that the more I sell, the more that cost of ingredients or cost of items that we resold has gone up. And we typically use a percentage in order to track that because, again, for instance, in the food world, when I sell something, I'm replenishing inventory in a fairly short period of time. And I want to track what's the replacement cost of inventory. As I sell something, it probably sells at roughly the same, I replenish at roughly the same percentage. But all of the overhead expenses in the middle are all the same. I usually start here by projecting my fixed expenses. Note a couple of things. For instance, real estate taxes. That's an expense that some businesses will pay. But remember, this is a cash flow projection. And how are real estate taxes paid? Typically, they're either paid once or twice a year. So if my real estate taxes are, say, $2,400, it's not $200 a month. That would work in a budget, how much I need to put aside maybe. But actually, when it leaves my bank account, might be March and September. So $1,200 in March, $1,200 in September to reflect when it actually leaves the bank account. Again, there's a section, so money comes in, money goes out, and that's cash flow from operations. Then outside of that, we note what our payments are that might go to the bank, to the owner of a previous, if we bought a business, sometimes we have a seller's note to someone else, or maybe an equipment loan and a real estate loan. But we can list out the loans that we might have, any kind of debt in the business or extra purchases that are planned later. And then at the bottom of the sheet, again, because there's formulas built in, it gives us a nice sense of what's happening in any particular month in that particular business. Jumping forward, I said I will wrap this up quickly, and then I can bring up a couple of spreadsheets. I can't really do it within the PowerPoint here, but I can bring up those spreadsheets and we can do a little bit of filling them out, or I can answer any particular questions that you might have. But here's the, I know that people, because we're remote, folks attending this webinar can come from throughout the state. And earlier I looked at the list and it seemed that you were from throughout the state. So MaineSBDC.org would be our statewide website. You can go there if you're looking for resources. There's business advisors, as I said, throughout the state. You're welcome to go there. I think there's a staff drop down and seek out a business advisor in the area in which you live. Again, there's not a charge for our services, and conversations with clients are confidential. The only thing we'll ask of you is to fill out that request for advising, which just confirms that we're not selling you things, and that we'll take you in as a client into our intake system. There also is my email address. You're welcome to contact me afterwards if you've got questions, or sometimes things bubble up. We take in a lot of information and then later, oh gosh, I wish I'd asked that question, but it didn't occur to me at that time. So you're certainly welcome to reach out to me later, and I'll certainly try to answer any questions that I can. I'll stop the share. My first question will be, are there particular topics that you'd like to go over right now? Or I can pull up a couple of sheets and we'll just fill in a few things and look and see how that works.
Well, we'll start off by saying good job so far. I don't see any questions coming in. So if anybody has a preference for an example and could show us, or a question, feel free to also just unmute yourself. This is a pretty small group, and sometimes these questions can be complex.
What I'll do is just, I know we're at the 12:30 mark. I will just pull up the basic sheet, share it quickly. We can look at that. And answer any questions that might come up around that. But as I said, really it's about figuring out what your fixed costs are. I usually start there because it seems easier to work my way into the sheet. It's a different kind of homework to fill out. Okay, what's my rent expense the whole time? Maybe advertising is not much, mostly social media, but it could be I'll have a web page and it gets hosted. So there's a small amount of money that comes in here that needs to go out every month to cover the web hosting. As I said, some businesses are seasonal. For instance, outside services, maybe I've got QuickBooks subscription, and that might be, say, $20 a month, which is fine. They like to get money from us every month. But oh, by the way, I will also have my CPA do my taxes in March, and that will be an extra cost. So again, it only happens once a year, so we add that into the month in which it happens. And let's say that's another $500. So now we've got $520 into that particular month. And that helps us to see as we look at the bottom of the sheet, again, it does the math. We know where we are, what our position is, positive or negative at the end of the month. And then we project our sales. This would work nicely, for instance, for a landscaping business, where maybe I do snow plowing in the off season, or in the winter season. So I'd have some months where I've got money coming in, throwing in $1,000, but maybe March there's not as much for storms, and it's not until May I start to do spring cleanups. So again, it helps us to look at what the seasonality of our business is. This shows us that we're doing okay earlier in the first couple months, but then, oops, I've got a hole coming in March and April because, again, the seasonality. But then as I get busy again in May, things pick up again, and I have a sense of how large that hole might be at any particular time. I could go on, but hopefully that gives you an idea of how the sheet gets filled out. Again, a useful tool to do what if scenarios. I know that if in this model, I need to earn $8,000 just to cover my cost. We'll at least cover my cost, maybe not give me a lot of income, but at least it starts to help me do some what if scenarios into the business that I'm either have or am projecting. I can go on, but again, happy to answer any questions that people have.
It seems like you've done such a thorough job that they fully understand it and they are ready to start their projections into the future for their super successful business that will eventually take over the state of Maine.
Right, or they know that they can reach me later on, and I'm happy to answer questions later on. But again, it's a tool that can be very overwhelming, but I find it very, very powerful and really critical piece of the puzzle as I work with businesses. So enjoy your cash flow projection. Yes, go for it.
This is Lisa Hanscom. I'm the one so I have rental cabins, which would be service and tours. Yep. But then I also have the Wild Blueberry Farm, where I sell fresh blueberries and jams and jellies and stuff like that. Absolutely. Would you suggest trying to make separate cash flows for each one? Or
yeah, go ahead.
Or just try to combine them in some way?
I think actually you hit on what I think makes it, my head would probably go to do two different enterprise budgets because they're so very different. I would probably do two enterprise budgets. So the blueberries is one, the rental cabins is another. And then if I had to, and I really wanted to get really fancy, I could take the totals from those and roll it up to a summary sheet or a cover sheet. Depends on how much you like working with spreadsheets, but I've definitely done that before when there's almost like two different types of businesses to keep the enterprises separate and then roll them together.
Okay.
Is that helpful? Did I answer?
Yeah, actually, it is helpful because to me, sometimes that's where I get the hang up is like trying to combine them,
Yes.
into like one package, and then no sheet actually fits that bill.
Exactly.
And it gets a little confusing, and then I just give up, like,
Yeah,
okay.
well, don't give up. Don't give up. But hopefully that makes it a little simpler. But yeah, my head went immediately to two separate enterprise spreadsheets and then combine them. And again, glad to chat with you separately if that's helpful. So
Okay, thank you.
yep.
Yeah, and I'll definitely include all of our contact information, a link to that request advising button, and Anne's email. So if anything jumps to your minds later on, you can always reconnect. Like Anne said, because we're doing everything virtually, you will be assigned like an advisor that's location wise close to you, but we do have advisors who specialize in certain areas. So there are certain people who light up when it comes to talking about numbers and some people who don't. And so we can definitely help light that section for you.
Sure. Yes. But again, business advisors throughout the state can certainly work with you on these projections. So then thank you for coming. Was there another question?
I don't see any, but if anybody has anything.
I'll ask another question.
Yeah.
Thank you.
So you're talking about projections.
Yes.
So are we, because I've used these spreadsheets sort of like as a tracking tool for just what I'm spending.
Sure.
Which of course gives you maybe an estimate, but we should maybe be estimating like what our cash coming in each month is. Is that what you're?
Correct. Exactly. Because these are projections, they're typically forward looking, but you're right. It holds that data, and I have had people use it then sort of afterwards as their bookkeeping system, right? Because it's set up with the columns that they figured out, they can use that to track the information. It's like those green ledger sheets, but in a spreadsheet. So they can do both. But yes, typically the cash flow projections are forward looking with whatever assumptions you put to them. But if you're an existing business, you have history, which then certainly is really helpful to inform that forward look.
Okay, thanks.
Well, unless Lisa's got more questions, which we're happy to answer,
Yeah.
I'm going to go ahead and thank you all for joining us. Thank you, Anne, as always. And of course, thank you to the Carver Memorial Library for having us. We hope that you will connect with us again in the future. And we'll see you then. We're getting lots of thank yous in the chat. So yes, thank you to everyone.
Well, thank you for coming. So best wishes to everyone.